Hey, good evening, Map here, Map Investments, bringing you a Sunday evening video to get you ready for the week ahead. Today is April 10th, and let's start off taking a look here at the futures. We have the 10-year at 2.78, up 5 bips. Let's take a look at the dollar, almost at 100. All foreign currencies are pretty much down. Usually that's the case when the dollar is up, and the real is really not a tradable. It's not a lot of volume there. Bitcoin down 720 to 42,000 basically. Oil down 236 to a little bit shy under 96. The S&P down 26 handles to 44.57. So it's pretty much down more than 0.5% here in the overnight trading currently. Futures open at 6 p.m. Eastern time, Sunday evening. Gold, 1946, up a little bit. Copper actually copper down to 468, down almost 4 cents. Small caps down 11 to 1979. The Nasdaq down 115 to 1412. 14 to 12. Dow Jones down 137 to 34,476. Nat gas has sold off a little bit, but still over 628. It was actually higher. I think it was up 9 cents, and now it's pretty much even, but it's been very bullish. Palladium and platinum are up, and silver is up a little bit. VIX is up 75 cents to 25.60. Corn up, soybeans down, wheat up. And the grains have been pretty strong. 30-year is down, meaning rates are higher, and so is the 10-year. So the trend has been that interest rates are climbing. The 30-year mortgage currently is at, here it says 6.5%. I don't think that's too accurate on this thing here, but I want to say interest rates are about 6%, 5%. I don't think it's 6.5 like it's stating here. I know it's at 5%. So that's what I've been seeing in the news. And refis have come down a lot because of this. And there's been layoffs at the mortgage brokers like Loan Depot and Rocket Mortgage. And it's getting more expensive to buy a home because of the higher interest rates. So, and also refi applications were down like 40%, if I'm not mistaken, was the news on CNBC last week, that refis were down big time because of the higher rates. Let me see what we got. It says your single-family rentals will face headwinds from homeowner communities. This guy is a realtor, so he's saying the market is hot. Here's an article: raising mortgage rates are causing more home sellers to lower their asking price, which is definitely true. Wayfair as inflation, housing market uncertainty hurt demand. Here's one of the articles. Total mortgage demand plummets 41% year over year amid raising rates. So I know there was an article today on Miami-Dade housing crisis. The Miami-Dade mayor, this is where I live in Miami, declares a state of emergency over housing affordability. It's just the houses have gone up here immensely. The rents are out of control, and yeah, they're and it's happening all over the place. But here, I think it's one of the worst in the country. Also, last week there was news on consumer debt exploded last week on the report. Consumer debt soars to highest level in over a decade. So people, I mean, I guess the savings has tapped out, because if consumers' debt is soaring, means people's savings are, you know, if you have the money, you pay for it. Now, I mean, why are you going to put it on a credit card? So the expectation was for consumer debt to be, I think, if I recall correctly, about 15 billion was supposed to be the number, and this thing shot up to over 41 billion. The expectation was 15 billion, and it shot up to 40 billion, if I'm not mistaken. So that's another issue for the banks. On the bar chart, last week, with higher interest rates, the tech sector is going to suffer. I am still in the camp that you want to be in the energy sector, you want to be in the mining sector, you want to be in the insurance sector like Allstate and a Progressive. And you really got to be selective in this market. Like I mentioned in my prior videos, I'm busy at work and grateful for that. And just sticking to the passive route whenever I have some extra, funds laying around. I buy some SPY, IWM, and some EEM for foreign exposure after I contribute to my company match in my 401k. And I recommend that everybody does that. If they're giving you a certain percentage match, take advantage of that. And also make sure that you're putting it away in a Roth. If they give you options within your 401k, if you got a regular one or IRA or a Roth, go with the Roth IRA. That would be better. That's what I'm doing currently with Fidelity, and grow your nest egg that way. If you have some extra income after that, definitely want to diversify. Like I've mentioned in my prior videos, in some of these metal miners, energy plays, shippers, insurance companies, and we could look here down the bar chart. Most active options. You can see here Friday was a pretty tough day, but you see Oxy up 4 is an energy play. ATER, I think that was a spec play. Citigroup, some of the banks got a bump. I mean, some people think the banks are undervalued now on the current sell-off. I think with higher interest rates, tech is definitely not the place to be. I think we're currently down year to date 11%, I want to say, more or less, on the NASDAQ and the small caps. We could confirm that on FizBiz. But the banks is a catch-22 with the higher interest rates. You might see more consumer borrowing, like on the credit cards, and you might see more defaults. I don't know if that's the greatest place you want to be. Because also, if they do have a lot of, because they have higher rates, people think, oh, they're going to do better. But also, less people with higher rates will do less business because it's just not economically feasible. I think the next thing that might happen with banks is they might just ratchet down on credit cards and take credit cards away from people to limit their exposure. There is a lot of chatter of an economic slowdown and recession in the horizon, and that what the yield curve inversion is stating. And if you don't know what yield curve inversion is, look it up, Google it, and study it. But it's pretty much that the government sells different bonds to finance its operations and its programs in the country. And so currently, here are the bonds. You got the 2 year at 5.7, the 3 year at 2.79, the 5 year at 2.82, which is paying more. The 5 year is paying more than the 10 year, and the 5 year is paying more than the 30 year, as you can see that. So people, basically, actually, the 2 year, the 3 year is paying more than the 30 year. So the government is selling these bonds, and the investors are pretty much piling into the front end of the curve. This is all a curve. If you look it up here, let me see if it'll show you Fed's yield curve graph. Oh, I could have picked graph. Let's see, maybe I'll look at it briefly. But as you can see here, this is the 10 year minus 2 year. So you see how it's it's negative. See here, assessing yield curve inversion. I'm not gonna make this the topic of the video, but I would do some research on that. Usually, it's indicator of a recession. So they say. So we have that going on. Also, I don't know if I could put it up here. Not sure. No, let me see if I can pull it up over here. But the transports were very, 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 very hit this week. Transport being, your FedEx or UPS or your trains, stuff like that. If you look at, let me see if I can pull up maybe the weekly chart. You can see on the monthly chart, it went basically. I think this was this week. This was the 30th. So on the 4th, we were at 15.5. So right now we're at 14.4 basically. So we sold off a lot on the transport, and that's another recessionary indicator. So keep your eyes open for that. Back to bar chart. So Kinder Morgan was up, energy. Some of the biopharmaceutical and drug makers have been up. Those are defensive plays. Bristol Myers was up. Halliburton and oil play up. BP Devon up. Moderna medicine play up. Rig up. Mosaic fertilizer. Now Mosaic is my biggest winner year to date with BTU, which is a coal company, and I'll get into that and some of my favorite plays. Tell up, which is one of my favorite plays as well, to accumulate with natural gas prices, I think, heading higher. But if you could see here, a lot of red. Gilead Drug Company up. Like I said, some of the financials were up. Merck up. Teva. I think Teva is turning the corner, and might be some value in that name over the long haul. Humana, a minor. ConocoPhillips, oil. CDV, oil. Walgreens Pharmacy, drug name you could say. But if you look along the line, it's just a lot of energy and food stocks, financials. Like I said, they had a better day, but they're not my favorite sector. Even though rates are going higher, I think we might see some more issues in the housing market, and we're going to see some issues with credit cards, I think. So yeah, those are the most actives. In the portfolio, so it's looking like tomorrow's gonna be pretty. It's pointing that way, but you can't really indicate based on futures. Tomorrow it could be green in the morning when we open. Um, Currently started down already with the sell off in the spy. Um, I have the spy, so I'm down some. Some of the names that I really like, and I'll just point out the biggest winners I have. Um, Really like uh, Nat Nordic American Tankers. Um, Directors were buying there at a dollar 70s or 80s, and these guys have about over 20 something oil tankers to move crude oil around the ocean. So like them, Valley is a miner that signed a contract, I think, with Tesla actually, and talking about Tesla and Elon Musk. Musk was saying that some of these metals are getting so high in price that it might make sense for him to open a miner. So think about that when you're investing. That miners and companies that can pass on the cost to consumers are the companies that you want to be in. Um, Ring Energy, like that one, a small oil name. Um, Cameco is a uranium play, doing nicely for me. I really like them. And then GDXJ are gold ETFs for miners, big miners and junior miners. I have a gold ETF doing well, and I have a natural gas ETF doing pretty good. And America Mobile is a telecom out of Mexico doing pretty good. And Freeport McMoran is a copper play. And I like Freeport McMoran and Tech, which is one of my best performers over here. Tech Resources is another copper name. And remember, you know, if you want to invest in the EV evolution, that's the future to come. Um, I mean, why focus on Tesla or GM or Ford or Neo or Plug or Blink, or why don't you? I mean, I think it would be better to focus on the materials needed to expand this industry, which is copper, is one of them, silver. You need all this stuff to make these things. That's just my 10 cents. I think that would be the better and safer way to play these names. But you can see here, Mosaic is one of my biggest winners, up 2,500. BTU is a coal name, up 2,300. Silica up almost 1,000. Um, they have many applications for their products. United Steel, metal, then my SPY, which I'm down tonight. Hopefully we get a bounce back in the morning. Uh, XLE is an energy ETF doing well for me. Tech is a copper play miner, just like Freeport McMoran. Uh, Century Aluminum is a little aluminum company. Star Bulk Carriers is a shipper. Patterson, uh, UTI Energy, another energy play doing pretty good. Neg is um, online seller of computer, graphic cards, you name it. They have a lot of stuff on there, and I think I took a stab at them, and it's doing pretty well. SWN, love that name, natural gas. I'm short the new home builders, and to round it up, RCMT, a professional services that's reported decent quarters and it's growing. Um, that's some of the names that I'm doing well in. The theme has been uranium, uh, energy plays, miners, shippers, and I just showed you a few that I like. Stay safe out there. The Asian markets are red right now. Nikkei down almost 1%. Shanghai down 2%, and Hang Seng down almost 3%. Um, we still have the Russians, with that war over there. It's gonna take some time. and just keep staying the course. Stay out of debt. Keep studying. Keep working hard. Keep looking at the trends like I do. And those are some of my favorite names that I pointed out. And hopefully I get to add some on some pullbacks. Have a good night. Stay safe. Like, share the video. And I'll catch you tomorrow. Bye bye.